The House comes to questions for oral answer. Question number 1, in the name of Todd Muller.
Thank you, Mr Speaker. My question is to the Minister of Finance and asks, what reports has he received about the latest trends in savings levels by New Zealand households?
Honourable Bill English.
Speaker, last week statistics issued the National Accounts income and expenditure data for the year to March 2014. It shows that New Zealand's household savings rate has now been positive for 5 consecutive years, something that's not happened since the early 1990s. In fact, before 2010, household savings had been negative in all years but one since 1995. Household savings totalled $2.8 billion in the year to March 2014, a positive rate of 2.1% of disposable income. This is a result of the resilience shown by households, supported by government policy, encouraging savings, reducing their dependence on debt, more moderate consumption, and therefore assisting in rebalancing the economy.
Supplementary question, Todd Muller.
Over the past 6 years, what measures has the government taken to encourage households to save a bit more and to reduce borrowing and consumption?
Well, Mr Speaker,
Honourable Bill English.
Well, a number of measures. One of those was a comprehensive tax package in 2010, which included across-the-board reductions in tax on savings and work and an increase in tax on consumption and property investment. In addition to that, the government has built on the work of the previous government in re-regulating our capital and finance markets, and that is now leading to a reinvigorated capital market with more opportunities for New Zealanders to invest in owning a range of companies.
Supplementary.
Supplementary question, Todd Muller.
What else did the latest National Accounts data confirm about the savings trends in other sectors of the economy?
Honourable Bill
Mr
English.
Speaker, it showed that the total value of the New Zealand economy is now $231 billion of GDP, up 7.3% from 2013. This is the largest increase in per capita growth since 2008. National savings totalled $15.5 billion. That is up $8.4 billion from the previous year and was positive for all sectors of the economy. Two notable contributors were improved net exports and higher business profits. Revised estimates show that the 2013 was the first year since 2000 when all sectors had positive saving.
Supplementary question, Todd Muller.
How do the positive household savings over the past 5 consecutive years compare with the previous trends in household savings rates?
Honourable Bill English.
Well, Mr Speaker, at the moment we have improving household savings rates in a growing economy. However, when the economy was growing between 1999 and 2008, the opposite occurred. In fact, household savings was negative 6%. Negative 6% by 2006. But this was hardly a surprise. At that stage, government spending had gone through the roof. Current account deficit was a record 8% of GDP. House prices were on track to double, and household borrowing soared by more than 150% in the 9 years to 2008. We don't think any of those excesses are going to accompany this current period of economic growth.
Order. Supplementary question, Grant Robertson.
Under the national accounts that he has just cited, in real or nominal terms, are exports above or below 30% of GDP for the year to March 2014?
Order. Honourable Bill English.
Well, Mr Speaker, it's interesting the members should raise that issue because... I can't give the member... I can't give the...
Order. Well, I'll decide. But certainly a question was asked and I want to hear the answer. So for the answer to be heard, it requires less noise from my left. Honourable Bill English.
Mr Speaker, I can't give the member that answer in detail. I can't give the member that answer in detail, but I have to say that when you take GDP as a whole, we're in a phase where house prices have been high and the Christchurch rebuild has pushed up house prices, so resources are tending to flow to construction. And we're in a phase where our largest dairy export has low prices. So it wouldn't surprise me if exports as a percentage of GDP aren't the same as they were a few years ago, but the government's objective is clear, and that is to raise exports as a percentage of GDP by doing things like reducing taxes and the size of government.
Point of order, Grant Robertson.
To help out the Minister of Finance, I seek leave of the House to table.
Order. If the member now wants to table a document, he rises to his feet without any ask for point of order and then seeks leave to table that document.
Point of order, Mr Speaker.
Point of order, Grant Robertson.
I seek leave of the House to table a document prepared by the Parliamentary Library that shows that the national accounts show in the year ended March 2014, in both nominal and real terms, exports as a percentage of GDP are below 30%.
That document's now been well and truly described. A document from the Parliamentary Library. Leave us sought to table it. Is there any objection? There is not. It can be tabled. Supplementary question, Grant Robertson.
Is the fact that exports as a percentage of GDP are languishing below 30% in both nominal and real terms, despite his promise that they would reach 40%, a sign of success or failure in rebalancing the economy?
Honourable Bill English.
Well, Mr Speaker, I'd make a technical point first. There's been a rebasing of GDP, which I'm sure the member... Yeah, I know, but the member will need to go back and see how those figures are calculated. But secondly, if the member regards the current state of the New Zealand economy as failed economic policy, I'd hate to see what success looks like. Because actually this economy is growing as strongly as anywhere in the developed world. That growth is looking sustainable. Households are getting higher incomes. More jobs are being created. Unemployment is dropping. We call that success, and I suspect when the member's more familiar with his portfolio, he'll regard it as success.
Order. Order. Question number 2.